The U.S. struck Iran. Markets are moving and money is being made and lost by the minute. And your portfolio, it's either positioned for this or it isn't. Today, we have 4 of the sharpest market minds breaking down exactly where to put your money right now. Oil, gold, Bitcoin, and defense stocks. Specific trades, real numbers, including one gold strategy with a record that will stop you right in your tracks.
I started it in December of 2024. We've traded 58 times since then, and we're 158 times in a row.
Before you make a single move, though, hear this.
Well, I don't think you want to chase and guess and pick ride or die horses.
Because when missiles fly, the money doesn't wait.
And then every time we fire one of these Tomahawk missiles, Lockheed Martin says cha-ching, and every time a Patriot missile system goes off, Raytheon says cha-ching.
And when it comes to the oldest hedge in the book,
Buy gold, buy silver, hold on, don't look back.
this is the playbook your portfolio needs right now. Welcome to Stock Talk on Unfiltered Finance. But let's really start at that 30,000-foot view on what your thoughts were when the news came across and your first instinct on what the markets were going to do. So, Jeff, let's start with you.
My first reaction when I heard it, I was actually out in the yard working. My wife came out and told me. So I was just like, oh, great. I said, that means the S&P is going to be down, gold and silver is going to be up, crude oil is going to be up. And that's where my brain was. And I thought, well, I can't do anything until tomorrow night, so screw it. And that's where I left it. And initially, it's exactly what happened. When we opened up Sunday night, the S&P was down, gold and silver were up, crude oil was up. There it was. I was like, well, there's the picture. Now we get to see how the U.S. votes on it on Monday. And I think right now the market is still trying to finger their way through it a little bit, just because there is kind of some uncertainties here and there. I think the big problem that the market has right now that it's trying to digest is with, as you were mentioning, Strait of Hormuz, with, the crude oil, with, all the, missiles, blah, 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 that we've been doing. We got more spending coming. More spending in the economy brings a little bit of inflation. Inflation brings interest rates back up. And all of a sudden, rate cuts coming into the future might not be coming. So now the market is kind of worried, are we going to have rate cuts or not? And I think that's why they've been kind of shaking around a little bit. But that being said, if you go back to November to now, the S&P hasn't gone anywhere anyway. It is just dead in the water, just dumb and stupid, and that's about it. You've seen gold and silver correct back a little bit just because, well, interest rates have been moving up. Bonds have been, moving down. And I think that's kind of where they're at right now. They're still trying to figure out exactly what's going on and let the market do it. Don't use your money to do it. I guarantee you that.
Yeah, it makes total sense. Jeffrey, what about you?
Well, funny enough, early February, I said we were probably going to chop around most of February, then take a spill March, because March seasonality-wise says that we get volatility. Didn't know what it was going to be. Turns out it's, missiles flying in the Middle East, and, we got a little volatility cooking here. So far it's been a little bit of knee-jerk reaction, and then kind of, okay, now what? I think a lot of things started out selling hard. A carry trade kind of blew up in South Korea, and if you look at the EWI, it took a sizable spill already, and the KORU, which is a 3x leverage on that, took a much larger sizable spill. And funny enough, we were right at a upside target for that right before. I was warning people that something's going to happen that's going to cause this to pull back, and then there you have it. So it just kind of all fit together for me. I heard the initial news. I was just like, well, that's the reason. I guess it's going to be pinned on why the market pulls back. And that seems to be the way it is. And Bitcoin initially done nothing, and then today getting a little bit of rally and might be able to break out and do the continuation pattern I told you was going to happen however many months ago it was when we talked. So
Jeffrey, I told you so, Turnmeyer. Is that what we need to be calling you?
I make these predictions, and I don't know why they come true, but they do. I don't know.
Yeah. All right, Chris, how about you?
Well, I think similar to everyone is just like, well, it's going to be an interesting day coming into Monday's trading, watching the futures market go down. But also yet again, watching the resiliency of this market just continues to kind of surprise me. Emily, last time I talked to you, we were talking about the dispersion trade, which under the surface means that you have had 1/3 of the S&P stocks either up 10, 15, 20+% or down 10, 15, 20+%. You have most of the non-US trades, the MIXI, ex-US, all outperforming the US, like Jeffrey said. South Korea, huge outperformance that just got just walloped this weekend. The oil prices, I mean, I had somebody that predicted in 30 days oil is going to go to $100 after it already ripped from 55 to 70. So jokingly, I kind of put that forecast on my chart. But there's ways I want to trade it. I mean, I like the oil trade on a pullback, but I want it to be a fine risk. The one thing I don't ever do is typically like react and chase. It was interesting where a lot of things that, Jeff said, it's like, okay, SP will be down, futures will be down, oil's up, gold, silver up. Initially, yes, but here we are right back into where we started. We're still in a 14-week chop fest for the S&P and the NASDAQ, still stuck in these levels. I don't know if this is like the most orderly dispersion trade that I have ever seen in my career, or something still big is happening. I mean, one of my dashboards called Pinch Point Scanner has literally the S&P, the Dow, the Russell, and the NASDAQ all in this like super pinch trade, which is super rare, number one. Number two, on indexes. It just means that whatever does happen next, whether we're breaking 7,000 S&P or breaking back down to, maybe hit 6,750, some type of breakout will occur. I would imagine this is within the next 30 to 60 days. So, the trader is trading this chop. The investor is probably not paying attention, but somebody that's looking for a breakout, just set a couple chart alarms, and there will be direction. I think that's one thing we can look at in the next maybe 30 to 60 days is the market will give us direction. I just think, are we really this resilient? 4% away from all-time highs, the market just refuses to go down. And a breakout may push us from 7,000 to 7,200, but we are certainly vulnerable. I just think I just thought, man, AI disruption, labor market softening, new Fed chair, Trump saying this. Now we have Iran. It's like, is this the climb the wall where we lose our grip? Nope. It's right back in the middle, and it's right back fighting the good fight. And you can't get any real confirmation to drive you one way or the other. And I also think Nate and I talked about this too. Zero DTE is a very real force in the market. And so when you come into trading on Monday and you have a powerful zero DT flow, all it was buy the dip instantly on Monday, and you got rewarded for that one day bet. So that is still a very powerful force that traders have to navigate, where it does not seem rational that we can have all these things happening that would be, arguably a bear market or arguably a reason for the market to pull back, but yet it just pulls back like for a day. It pulls back with a gap lower and then fills the gap. So just be willing to, trade what you see, not what you think. And this market really isn't acting very rational. So just make prudent and good risk management decisions.
Nate, how about your quick take?
Well, my first reaction, it was Saturday. So actually the first thing I did is I looked at Bitcoin, because Bitcoin will move on Saturday, unlike the S&P, and it did nothing immediately out of the gate, like literally nothing. And I was like, all right, so maybe this is kind of optimistic. And then we did get the, Monday flush, the really aggressive buy the dip, the Tuesday flush, the pretty aggressive buy the dip, and the fall through today. On Monday, I made a very, very bold call that I believe we were 50-50 breaking down or staying back in this range. So, that's why they pay me the big bucks for those
very bold
predictions.
Wait, which side of the 50 did you choose?
Yeah, well, I'll let you know a little bit later, Emily, what side I was on. But,
stay tuned.
But honestly, kind of like Chris, we've been showing this range. This is like a closing playbook tradition now that I have to pull it up every single day, because we've been showing this range since February 1st. We're still here. And to Chris's point, I don't think everyone realizes the level of rotation that the SPY made while staying in this range. You would typically see a 5 to 8% correction with the amount of rotation that went into industrials and energy and utilities. And we managed to keep things afloat. Then Trump tariffs, then war. It's like, I have to be slightly optimistic that if we can handle all this under all the crazy conditions, just get a little, a little tech participation, a little optimism, and we can actually break this thing up above 7,000. So that is what I'm waiting for. Lots of headlines. All I really care about is this range still. This darn box on my chart that won't go away is really the main thing that I'm watching for directional bias.
Let's just start with oil, because I think anytime anything happens in the Middle East, that's where your brain goes, right? Like, this is the one thing that has the most direct connection to what happened in the Strait of Hormuz, because it handles basically 20% of the world's oil supply. So any real disruption there doesn't stay in the Middle East, it ends up at gas pumps and on factory floors across basically the planet. What do you feel like is actually priced in right now? Where do you see this going? Where in this realm, what's the key takeaway?
Well, oil is probably one of the most heavily manipulated instruments out there because it's such supply and demand, such geopolitical forces. I was surprised at this for the first time in a while. I mean, look, the best trade for me oil wise was to be bullish in the mid 50s and have a defined risk below that. And so those traders, those investors getting paid on that, love this move. Now, the chase to the upside is how much worse do things actually get? The Strait of Hormuz is mostly Asia affected, not necessarily US affected, but it's still global. It's still a global route. But as far as the trade goes, this is what I posted this morning for members. I mean, I like the trade, but I like to do defined risk. This is Don, the member of mine that said oil's going to $100 in 30 days. So I just put it on my chart. Let's see if Don's right. But for me, I mean, I want to see if there is a swing trade and a pullback trade, which would be something like this in oil futures. So if we have, this low to high swing, we have either a pullback, and I mean, it's volatile enough that we probably have an aggressive correction. But based on this structure, I would like to take some, bullish debit spreads, looking for some type of symmetry to the upside and getting back up maybe to this measured area. But even if it's just a swing trade to symmetry, low to high, pullback, higher high to or lower high, higher low to higher high, find some symmetry. But I look at a defined risk trade that as long as price just goes up by a couple of dollars, I get paid on that swing trade maybe over a 30 to 60 day window. I could still probably take that trade and generate 125 to 150% return on investment. So I don't need price to go to 95 or 100. Nobody's going to want to see price go to 95 or 100. So I think the knee-jerk reaction is, oh my gosh, oil's up, inflation in the US is going to start ripping. It hasn't yet. Not yet. If you look at Trueflation metrics, it's barely budged. Let's say hypothetically we go to, $90 to $95. If it does it inefficiently, I'm going to take a defined risk trade to sell oil. If it pulls back first, I'm going to take a defined risk trade to buy oil. That's my outlook. I think there's more to come, but it's like, is it a knee-jerk reaction versus price in? Market is smart and just let, maybe a swing trade set up. But if I want to be really bullish, I would have already been doing it. If I want to be bearish, it's going to be up here at resistance. So I'm not chasing this stuff.
When you are looking to trade oil, is there a specific time domain that you look at? Is this something that you're like, let me do this for the long haul? Or is this something you're like, I'm going to get in and I'm going to get out?
It's get out. I mean, typically I'm comfortable with like a 2 to 4 week window. This to me, if I do have price pull back into this trade zone, all I did was I plotted a low to high Fibonacci. And all that means is if we get a pullback window, pullback percentage they're looking for, I'm probably going to buy a call, sell a call. That's going to be my line in the sand. If that can give me like 125% return on risk, all I need price to do is go, higher than that sell strike and get the symmetry. That pays me. That's a binary event. I risk $1,000 to make $1,250, make $1,500. That's a good trade for me. It doesn't have to be anything crazy. And if I'm right, I'm right. If I'm wrong, I'm wrong. But I'm not going to put a lot of emphasis on going all in and throwing a ton of allocation at oil when it's just a very slippery index. It's just a very slippery asset.
One of the other places I think everyone's mind runs to at a time like this is defense stocks, which Raytheon, Lockheed, Northrop, the names that everybody immediately thinks about in a moment like this, they've moved pretty quickly. Some of it maybe a little questionable. We've seen the headlines, which, by the way, on the YouTube channel Unfiltered Finance, we have a whole breakdown on congressional trading, and we've seen some of that happen here. But the question that I have here is that once the news is out, the trade is obvious, how much runway is actually left? And so, Nate, who's still a buy here? Who's already priced in? What good news is there for folks who are looking to put money there?
Yeah, well, it does get to the chasing question. Do you want to chase, how much headline and stuff is left, here in the medium term and the short term? One thing I really like about defense stocks in a situation like this is that you're not chasing a bad stock because of the situation. They're actually good stocks. So you actually can, in my opinion, be a little more aggressive trading those stocks in an event-driven environment than, some AI thing you think is going to happen, then you're trading some junk penny stock because you're chasing that event. Here, we're talking about stocks historically that are actually really good performers. And there's several others that fall into the category. One, if you like the idea of having that in your arsenal, and like me, you think they're pretty good stocks to hold anyway. One of the really easy ones is Shield, SHLD. It's just a global defense stock. And so you can see this is not just an event-driven stock. If we go to the weekly chart here, it's a pretty darn good instrument over time. Since it was introduced in 2023, it's up nearly 300%. So that's a stock that you feel like, hey, I'm not just chasing on it, and if the next headline doesn't come out, it's going to drop to zero. It's a good stock. It's one that you can feel pretty good about buying on dips. This is, your Raytheons, your Lockheeds, your Boeings, your Northrops. It also has a couple of the little drone companies and some of the smaller caps in here. And so if you do get one of those smaller companies that land a multi-billion-dollar deal with the U.S. government, it's going to show up here where, Raytheon might take a 2% hit that day. Shield's actually going to go up that day because of that smaller cap stock moving the needle. So really easy one to trade if you want to have some exposure, but you don't want to pick your horse and ride or die with it. SHLD.
Under this administration, looking at the events that have happened so far with Venezuela, Mexico's cartels, now the Middle East, there will likely be more headlines in the future, whether one wants it or not.
It's hard to believe that there won't. And, some of those are going to be very short-lived. But obviously, just in the environment that we're in right now, there is the very real scenario that long-term impacts are going to emerge. And because of the United States' place in the world, they don't even have to emerge for the U.S. It can just be an ally that's involved.
Right. So where oil, as Chris was saying, is more of a short-term get in and get out, these defense stocks, you're looking at more of the longer term over time.
Right. And like, Raytheon, Lockheed, all of those, they often will make my watch list just on a regular normal day. Because they fit those criteria. They're good stocks. Most of them are pretty liquid as well. And so I don't need them to be, slamming headlines in order for them to work out in my favor. They're just good stocks, and the headline becomes a bonus.
Yeah. Well, thank you, Nate. I appreciate it. One of the other things that I think everyone has seen change is the U.S. dollar. Coming into the strike, the dollar was already weakening. The Iran strike interrupted that trend pretty sharply, though. But that Iran-driven rally and its longer-term structural headwinds are kind of at odds right now in direct conflict, which is perhaps exactly the kind of tension that explains why we've seen a bump in some of the safe havens, or what people would consider the safe havens. So Jeffrey, I told you so, Turnmeyer, of course, knows all things Bitcoin. Let's get into the specifics, because crypto's reaction to this geopolitical event, well, any of them, they're not very simple. Sometimes it runs as a hedge, sometimes it sells off with risk assets. But this ride, I think, has been one of the more interesting ones. As Nate said, this is exactly where he went immediately to look to see what was going to happen. Now surging above $74,000. Like, I want to know what you make of the move and whether or not this holds.
Well, I mean, I guess I could share a screen here and just, it's going right up the arrow I had drawn the chart. I can't always explain why fundamentally, the story makes sense, but I was just been waiting for the consolidation to stop. I've been playing it since back here, and on my Market Master show, I've been talking about how I was trading short puts on IBIT around 36.50, which was kind of right there in the bottom. If I pull up IBIT here, 36.50 is just right here at kind of the floor, and few people followed along with me. My co-host there thought I was a little bit nuts. He thought IBIT's going to 30, and turns out we've had a floor, and I've made a few weeks of profit here selling at 36. Now we're up to 41. This move is starting to be a little bit played out, though, and we're probably going to go back into the next wave of correction. That wave is probably going to take us back down late April, early May, and then we'll probably pop into June timeframe. But then that sets up for the bigger sell-off into October, where we'll probably drop below the low that we made back in early February on Bitcoin. It has nothing to do with geopolitical. I mean, this is all human emotion. I guess you could say, it does have to do with geopolitical, because human emotion is, what's more human emotion than geopolitical crisis? So, as the rotation happens, I just think it goes on its path. We're probably in a crypto winter. It's probably going to make this low out here several months from now. I don't think that anything that happens geopolitical wise is going to really change the path. And
Yeah.
just to add on to the rest of it, I had warned that when we were down in the 50s on oil, we were probably going to see missiles flying in the Middle East because they need it above 50. That's just kind of the way it works. And we ground higher, and then geopolitical stuff kicked off there. And then every time we fire one of these Tomahawk missiles, Lockheed Martin says cha-ching. And every time a Patriot missile system goes off, Raytheon says cha-ching. And then we've got other munitions producers like General Dynamics and Textron that sit there and produce stuff. And then companies that are going to benefit from longer term stockpiles are going to be like L3 Harris and Huntington Ingalls. They're going to.
When does Bitcoin say cha-ching?
Probably next year.
At 125 plus K.
After we make this bottom, late October, we'll start on the upside into 2027. So.
Yeah, you've been on the channel before on Unfiltered Finance, and we've talked about this, about the crypto winter. And, so we've seen that very, very directly played out. But obviously it's gone up with the news to a certain extent. Do you feel like this is just an aberration? And then, your graph shows, oh, we're going to go back down. Do you think this could maybe shorten the crypto winter?
That's not going to. It's we're gonna follow this path right here. That's gonna go up to around the 75,000 area. It's gonna pull back to around 66,000 area. Probably rally up to around 90,000 area, and then drop back out to the 50, $30,000 to $50,000 area.
So since it's up now, is this a time for people to sell or stay put if you're?
I mean, we're looking at a potential top right up here around 75,000. So we're pushing into 73,000 right this moment. So we're probably coming into a top. If you don't want to sit through any kind of pullback or chop, it's probably not a great time to jump in. It's just going to suck people in and frustrate people. The market's great at frustrating the most number of traders it possibly can. And it's just going to be really frustrating till early October, probably, when we make the bottom.
What's your take on Bitcoin as a safe haven? Especially in times like this.
I see it as the most risky asset you could possibly be in. And, we did get some selling there on Sunday. We had selling. We had a little bit of nothing burger on Saturday. We did get selling on Sunday. I guess it did dip and pop back up on Saturday, but then we start, it's just been chopping. And then today we're popping a little bit. I'm sure there's lots of financial media people out there that'll tell you why we're popping on Bitcoin, but I think it's just on the path.
For as emotional as Bitcoin is, let me put it that way, do you think there's any headline that could upset what you think this is going to happen?
Anything can happen. I think that this is the most probable path for Bitcoin right now. I can sit here and speculate all day, but this is the most probable path. Anything's possible, though.
Yeah. Yeah. Well, thank you, Jeffrey. I appreciate it. We all appreciate your, clairvoyance when it comes to this. But when it comes to maybe the oldest hedge in the book, that of course being gold and silver, let's move on to metals, where they are textbook fear trade. They were already running before this happened. We'd already seen all-time high. And then yet again, hit another one this week. So the question now is whether a strike on Iran is the catalyst that takes gold to yet another level. Is it too late to get in, or this is the sell the news moment? So Jeff, what is your thought on this?
Buy gold, buy silver, hold on, don't look back.
Even now.
I think everybody gets all worked up. I mean, the one thing people don't think about, 1 year ago today, where was silver?
Not off the top of my head, not nearly as high as it is now.
Yeah, it was 28, $30.
Yeah.
We're up here at 75 now. I mean, we've had a huge run. Anything that runs, I mean, here's a silver chart right here. They had basically since November a parabolic run. This is like an exponential curve, if you want to look at it that way. And it was due for a correction, and that's just life. But one thing that's really interesting here is if you just look at this blue line here, it's a 50-day moving average. Gold's been holding above that 50-day moving average very, very well. And in fact, this kind of went parabolic on gold. And when they yanked it back, they overreacted, which the market always overreacts to everything. But they're basically kind of back into that same trend line that they've had here. That's what gold's done. Silver, on the other hand, and this is just technical part of it, silver here, I don't know where you can find the trend line because it's either really flat down here because it didn't move a whole lot, or you use this, and right now it's not that same kind of picture. But silver has become a whole lot more volatile. I mean, you're looking at a $70, $80 stock, if you will, that's moving $7, $8 in a day. That's volatility. That's moving 10% in a day. I mean, that's just crazy. And so until that kind of starts chilling out a little bit, which I don't know if it will or not, I still think they're still on the bullish side of things. Fundamentally, nothing has changed. If you just step back and say, okay, remove the Iran bombing and stuff like that, fundamentally nothing's changed. You still have global banks getting rid of the dollar, buying gold. You still have more flows of gold being bought by central banks around the world. We still have inflation. Everybody says inflation's going down, inflation's going down. That's the biggest lie I've heard. Inflation's not going down, it's just not going up as fast. I mean, we're still going up at 3%. It's just that we're not going up at 8% now, but inflation's still going up. And then gold and silver still inflation hedges. I think overall, though, there is no, real problem. I mean, I think every time it drops like this, it is a great buying opportunity. You just look at this. I mean, we dropped off 21%. We rallied 22%. Now they kind of got things correcting back a little bit. I'd really like to see silver get back above, $100 to really get some steam rolling. I think it's going to take some work to get there. And that's the same thing with gold. Gold right now is really struggling with that, I'll say 5,300, 5,350 area. And that would put us right around that, 38% retracement if it did that. But I think that would be a great buying opportunity if it did that. But I think overall, they're still going to be good. And what you were saying earlier, which is exactly why you got this correction back in gold and silver. No, the dollar's up. I mean, dollar was dying off. The dollar was weakening up, went down to what was it, 95.5 on the dollar index or whatever it was, and now they snapped it back up to 99. And that really pushed down. And the only reason why the dollar jumped up is because bonds sold off and interest rates shot back up. And so that's what really got the buying back into the dollars when the interest rates, started, coming back up. And they were all touting last week, hey, we're below 6% on the 30-year, blah, 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 blah. It's not there now. It's back above 6% just because interest rates have come up. Well, when you see those interest rates going up and the dollar moves up, that's going to put downside pressure in gold. But I think, any downside move in gold and silver, I think is a great buying opportunity in either one of them. And it doesn't matter if you're buying the bullion or if you're just trading GLD, SLV, or even any of those people. The companies that are out there are a little more volatile just because they have, CEOs and earnings and stuff like that. There's one that I like. It's actually SSR Mining. It's not a very expensive stock. I mean, it's $33 right now. You can kind of see this big gap that we had today. And I was kind of waiting for it to kind of pull back to like $27. But we had jumped up because they just so happened to sell their mine over in Turkey for $1.5 billion. And so now they have a bunch of cash. And so they make a new all-time high because of that. And so, but I still think it's a really good company. It's actually based out of Denver, Colorado, for those of you in Colorado. But it has mines in Colorado in the United States, and they actually have some down in Argentina as well. And I think this one, it's been kind of defying, it's a gold stock, but it's kind of been defying gold. And I think if gold starts perking back up, this one will probably run along with it. The options are a little on the expensive side. But I think you can probably go out to April and, buy the $34, $35 calls and get them for right around, $2.5, $3. And I think it'll pay out pretty well if you just want to ride something up a little bit.
Yeah.
So,
Well, I've got a question for you about silver. You were talking about the volatility and how, traditionally it was just this nice, like calm curve, so to speak, comparatively. And now it's, all over the place. Which one do you think will be the norm moving forward? Do we need to expect volatility, or do you think at some point we'll get back with silver anyway to a more steadfast path?
Well, I think volatility continues. I don't see. I mean, Jeffrey kind of hinted to it, and I agree with him 838% that I don't like March. I mean, you think about this. During the COVID crash, right? When did it make a low? It was the middle of March, right? And then it turned around and bounced. If you go back to the 2008 bank crunch in 2009, when was the low in March? In the middle. And if you go back to the dot-com crash, exact same thing. In March, they made the low and they took off. There's a lot of years that we make lows in March, in the middle of March. So when we hit the beginning of March, my little red flag in my brain goes, it's March, watch out. And I get kind of weird to thinking, okay, we're going to correct this market back some more. And if it doesn't, fine, that's cool. But if it goes down for the next 2 weeks, no skin off my back. I already knew that was going to happen. But after about when you hit the first day of spring, buy the S&P because it's probably going to bounce back up going into Memorial Day. So that's just what happens with it. And it's not to
the
say
Ides of
that
March are just not for Caesar.
yeah, exactly. But the thing about, when you start looking at silver is a totally different animal than gold is, because it not only is it a precious metal and it's the poor man's gold because it's a whole lot cheaper than gold. And it's not unusual to have silver outperform gold percent move wise, but just not price wise.
All right. So that's the key, right? Is like wild thing.
Yeah.
It's never too late. It's certainly not too late to get it.
It's not too late. And I mean, if people want a way to trade gold, I actually have a way of doing that.
And we're going to get into that in just a minute. But it's funny because Jeff and Jeffrey on opposite sides of the literal or figurative coin, if you will, when it comes to these things. Really quickly, I just want to do a quick take as what investors need to know. So like, what is the key not to do, or what is your key takeaway? And just hit all of our guys. And Nate, we'll start with you. Just quick pick.
Well, I don't think you want to chase and guess and pick ride or die horses. I also don't think that projecting out continuation right now is an effective strategy. Just because something has momentum doesn't mean anything right now. We've seen 2-day momentum runs reversed, 2-day momentum runs reversed, 2-day momentum runs reversed. One of the best things that you can do, in my opinion, is actually short the VIX anytime it's up over 25, 26 with defined risk. I'll actually pop I did training on this. If anyone wants it, just about 20 slides show you how I do the VIX short. Every time it pops up, I do a put spread. If it pops up more, I do a higher risk reward put spread with a little more time, and so on. I treat it as one defined risk trade. And so I think that is one of just kind of the easy ways in a headline-driven environment where we've seen the VIX spike, 14 times since December 15th and not stay above 22 for more than a week one time yet. I think that's, one of the easy ways that you can practically do what I'm talking about. Don't jump in, don't chase, actually just let the market settle back and have a trade that takes advantage of it.
Jeffrey, how about you? Key takeaway or what not to do?
I mean, basically just stay calm. Like that's keep a level head. As I don't remember who said, this too shall pass. Like this is just an event that's going to last maybe 4 or 5 weeks. Maybe it'll just be the new norm. It just depends on how, I guess how the regime change flows along. But I just keep a level head and watch the charts and listen to what's telling me it's going to go up and what's telling me it's going to go down and plan accordingly.
Keep a level head coming from our Bitcoin guy. The irony there is not lost on me. All right, Chris, how about you?
Every time I've seen the VIX flare up, interesting that Nate is shorting the VIX, which is again a great strategy. It's been shown to work. Vol suppression is a very real thing in this current market. I have also done a lot with just like selling premium. I just added up today the trades I've taken so far in the first, let's say 6 to 8 weeks of trading. Anytime the VIX has been over 20, which has been probably a half a dozen to a dozen times, I'm just going out selling below April 2025 lows, selling SPYs, selling Qs, selling DIA, selling IWM, just index related. I want more of the haystack, not the needles. I know there's a lot of craziness going on. Like Nate said, no real momentum is happening. Trades are all over the place, which is fine if you're a stock picker. I pick my stocks on certain occasions, but for the most part, I just think that we have a lot of chop. The market can stay sideways because it's a phase. Like the market, we've been conditioned to think like buy the dip, the market goes up always, or a pullback by the dip. It's like, well, sideways is a real environment that we're navigating right now. And people are getting frustrated and annoyed that it won't go anywhere for 14 weeks. But let's say it lasts for 20. Let's say it lasts for, 30 weeks. Let's say half this year is sideways. Nothing you can do about that other than trade it. So with the VIX elevated at 20 plus, I'm going to April 2025 lows. My timeline, a lot of these trades are September, October of this year. I'm a little bit more buttoned up on risk coming into the midterm elections. So I think by November, December, the market might limp in. And then I'm certainly a little bit more cautious going to 2027. But still, I mean, there's plenty of good trades to be had that keeps me way out of the way. A lot of my margin for error is like 30-40% away from current prices.
And
so
by the
I'll
way,
just look
one
at
of
different
the
trades.
one of the beauties of what Chris is talking about, because I do the exact same thing, when the VIX is up, the market's down. And so the market is going down. It's already near a floor. You get more premium. You get an inflated cushion. It's like giving you a big fat cushion and paying you more to take that cushion in the exact environment that you want to do that trade. So
When the VIX goes down too, it's like you see these bigger jumps in your P&L because it's just like all that volatility contraction is just showing that like your out of the money moves are even safer and safer as time passes because time is my friend in these trades. So, I think, Emily, we talked about this last time I was on your show. April 2025 lows is a very key level for me in pretty much any stock, any index. And I think that's a pretty safe trade for 2026 because this may not be like the golden era of the U.S. This may not be like a golden year for the U.S. Performance, but I do think it's going to be resilient to what we have seen so far, which is we will not budge. There's too much in the tailwind side. There's a Trump put, there's a Fed put, there's something that will keep this market, trying to grind higher or at least trying to stay at these highs before things maybe come a little bit more loose, maybe 2027 or so. So
Yeah, well, you're teaming up perfectly when you talk about a golden year. So no pun intended, except for intended when it comes to gold. Which is
intended.
why we're saving Jeff for last. Jeff, it's interesting because we've talked a lot about all of this, but when it comes to catching short-term momentum bursts with gold and silver, you actually have an actionable way for people to do that. And what is it?
Yeah, I mean, the one thing, gold can be quite volatile, as we've seen. I mean, a lot of them can be. But one thing that I am in full belief of still is we haven't made it up to 6,500 or 7,000 on gold, and I still think we're going to try to get there. How it gets there, I don't have a crystal ball, unfortunately. But I think it's still going to be going there. And what I do is I always look for those positive moves. Now, I love pullbacks like we get, just because I can get in a lot better prices. I have a weekly trade that I put out on gold every Thursday, and it is undefeated. I started it in December of 2024. We've traded 58 times since then, and we're 158 times in a row. So I'm trying to catch up with Jeffrey on his SPX.
You can borrow his crystal ball. I guess.
I got a bag of unicorn dust. That's how it works.
Right.
Unicorn dust right there.
But anyway, we're 58 knowing that. And in fact, we just got in last Thursday, got out on Monday and ready to rack it up and go again tomorrow. And I'm kind of itching. I'd get into it right now. But anyway, I always just love trading that thing. And I think it's a fantastic way of taking advantage of no gold moving around.